All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for July 15th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 438. My name is David Kosmeter. I'm the creator of Timing Research, and you should be seeing my screen right now. So today I've arranged for Erik Gebhard to join us again, as well as Norman Hallett, and the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks a lot, David. And big Monday, a lot of action right off the get-go. So we've got a lot to talk about. And right now, let's start out with that S&P 500. We got Norm Hallett with us and Erik Gebhard, and they're going to give us their insights. And so let's start out with the S&P, and we'll start out with Norm. Norm, what are you seeing here on the S&P? I think we're a little bit higher and been bouncing around up here.
Right, as one would expect in the chart I'm looking at. Um, I think that look how steady it is. We're getting that looping. You can almost measure it on the calendar. You see where June made a low, and then again we had a kind of a looping low in July, and now we're kind of up and looping again, of which this pattern should probably continue. I would think until further notice. Until such time as something major goes on. I think in general, as we get closer to the election, and as people start to look at the possibilities of each of the candidates getting in, I think this is where we may have some, either literally an acceleration of this on the upside or an interruption and some corrective action. And I would think that if Biden looks like he's going to be in a dogfight here and possibly win. He's a little bit behind right now in most of the polls, especially, of course, in the important states. I would think that this market will continue to look like this chart looks as continue. But I think if Trump continues to lead and improve his position, I think that's where some uncertainty could come in. And with the tariff talk, et cetera, that we're looking at, I think that we could see, that would be, I'd be looking for the corrective action there. So I'm just doing what the chart tells me to do. I think if you're long, in the general vehicles to be long this market, I don't see any reason not to stay in it. And if you're asking for this week, like we usually ask for, I think my opinion remains the same. I think we're looking probably higher. That's just because I'm going with the flow here. That's obvious.
Yeah, the flow's definitely been to the upside, no doubt about it. Erik, what's your gut feeling on the S&P right here?
Yeah, well, I think that this reminds me a bit of, was it 2017, where we were seemingly there were seemingly no bears left in the entire world when Trump was talking about and the media was talking about various tax cuts, and we just kept getting a push nearly every day, higher and higher and higher and higher, and that was on top of already a prior bullish move. So kind of reminds me of that, in terms of how the election plays out. I think the predicted markets, last I looked about an hour ago, show Trump at like his highest, I think, in quite some time. I think it's 66 or 67% right now, and even pulling ahead in Pennsylvania. But we shall see what can happen. But in terms of what to do with the S&P right now, you would want to not fight the trend. I mean, that's stating the obvious, perhaps, but we're looking. I think there's a large options expiration is at 1.5 trillion on Friday, and we kind of look at some of the dealer flows as well, like looking at what the gamma is with the options positioning, and you're in what they call dealer positive gamma right now, which kind of suppresses volatility, which suggests and implies continuation higher on equity prices, such as they are. We've seen very little breadth at times. As you kind of had the S&P maybe some days up 1% for the day, with 495 of the stocks negative on the day. Although last week I think the breadth was quite a bit better than has been the case. So I would suggest that you're going to look for a higher close by Friday, if that answers the question.
Basically, like I say, there's and like you were saying, it's got an up momentum that has not broken yet.
That's right.
I have a quick question for you guys, though. I've been noticing that there's some of the tech sector, and we're going to get into the other indexes, but on the tech sector, I'm seeing some of these markets losing some steam. And one today is Super Microcomputer, which is being added to the NASDAQ 100. And this is a stock that went up to 963 today, and now it's trading at 892. Now, if you put that in with stocks like Meta, Microsoft, Netflix, Broadcom, Qualcomm, and others that have kind of started to fade a little bit, is that a precursor of any problem, in your opinion, Norm?
Well, just to refresh me, because I'm not familiar with super microcomputer. What exactly?
These guys are in the heart of the AI deal, so they're right in there with NVIDIA with regards to the data center stuff and all that kind of stuff. So they're basically an AI play, as you can see from the move on it. And they are now being added to the indexes, and they're dumping things like Walgreens. Walgreens can't get out of their own way. These people are coining money, so obviously they're trying to keep the indexes current. But the fact that, like I say, if you look at some of those stocks that I just mentioned, they're not on their highs anymore. And then the super micro opening up at 963 off this news, and then going right down into the 800s. I'm just wondering if there is some kind of either rotation going on, or if there's an indication that some of this stuff is getting a little bit tired. And if these things gave it up, the tech sector gave it up, it might be hard for the index to go substantially higher. So that's all I was mentioning. So
yeah, in looking at this chart, the last three peaks, of which we're in the midst of the third attempt to break out of this recent sideways pattern since May, this to me portends a pretty nice move. Maybe several $100 one way or the other, either matching the old high at 1,200 and beyond, or coming down maybe as far as $500 from what I'm seeing right here. And I do that because I'm a big believer in the old school of taking a look at this sideways accumulation from May through the present, putting the compass pin on the current market, and then swinging the pencil one way and the other to find the potential if this thing breaks one way or the other. But more specifically, from what I'm saying, listen, 3 is usually a charm one way or the other when it comes to where we're going from here. If we take a look at the recent the peak at $1,200, right above there, without drawing the Fibonacci numbers, I'm looking at a pretty good 50% correction right at that at the hanging man low. Let's see if well, no, you want to bring it down to the where we started the move up, way down there. Yeah, and yeah, you see the that solid line in the very middle. Yeah, are you in the right spot there? Yeah. Well, you can see where that looks like the 50% line. In any event, I don't see the numbers on there. I'm just looks like the 50% line there, which is what it looked like visually. But the idea here is that the market's got to tell us where to go. I don't think we have a friendly RSI. It's the RSI down there. We're seeing a matching of the height on the second peak, and then on the current peak we're seeing a little failure of momentum, although the peak is not quite as high. We're already starting to roll a bit on that. So I don't want to get too much in the granular here, but I do think that this is a wait and see market, and I would, if I was a betting man, I would probably look, you know, I don't know. I wouldn't bet on this because it could go either way. Listen, this has
Yeah.
been a strong market.
Yeah,
And
yeah. Well, this has been a stalwart, but when it does run out of relative strength, like it did in March, it certainly can give up the ghost a little bit. But you know, just the whole vibe of like you know, a lot of these big name stocks are not on their highs anymore, and some of them have given up a pretty good amount of money. And I'm wondering if that's going to, unless you know, of course, if earnings come out for these companies, which are ahead of us, and they show that these companies are making a ton of money, then obviously it could go right back on the bicycle. Eric, do you have any feeling on you know, the tech sector kind of losing some momentum, and could it be a precursor to, you know, something like we saw in April? I mean, you know, the last time we had earnings obviously was the end of March, right? So when did they announce the first quarter earnings? In April. And if you look at the April activity on many of the indexes, it wasn't the best action you've seen. And so is it possible, in your view, that these earnings expectations have now been risen to a point where if they're not met, like Wells Fargo or something like that, that you could see at least a possible reversion to the mean?
Well, you know, certainly, absolutely, you know, was it 5%, 5.5% drawdown, was it in April, I believe, on the S&P? So, you know, a couple observations. First of all, on that SMCI chart, I have to laugh out loud at the RSI back in, was that May or
Yeah,
April? Was it nearly February? I mean, almost 100.
yeah.
I mean, that's pretty absurd. I think Norm pointed out the RSI currently, what's going on in relation to the price movement there, you know, doesn't give a whole lot of indication specifically on the SMCI, but also I'd point out just in the bigger picture, you know, whenever you know, this was in the Russell 2000, and you know, our S&P decided to welcome it into its fold, and they have a track record of basically adding companies at their highs and selling them and dismissing them at their lows. I remember reading a study about that, and they're the absolute worst stock pickers in the world. If you were to look at their track record for when they add something or when they move something off of the index. So just kind of a little bit of anecdotal trivia there. But in terms of the bigger picture on the tech industry, someone was commenting, more than one person, I guess, was commenting, and I was kind of thinking this myself and talking to my partner here, Mike, and other people in the office. And if for all of the AI talk and hype, if you want to call it that, and that narrative, no one has really been able to quantify if it's making any money for anybody. So I'm not sure how that really plays out or what that's going to look like, but you know, certainly at some point it's going to have to pay off and show up in the earnings, as other than just you know, being mentioned several hundred times during a conference call. You know, I think pricing is certainly gotten ahead of itself, but I don't know that I would want to, you know, sell this market. I think any dips probably are still a buy. You know, looking at some of the ETFs like you know, was it XLK? Isn't that it? The technology
Yep.
ETF XLK.
Yep.
Yeah, I mean, I think you're still bullish and on track, and you'd want to stay the course on that. And again, a lot of this has to do with money flow and, you know, institutional balancing and hedging, and you know, you get this you know, what they call dealer gamma, and you want to, if you're in positive gamma, then usually that implies a continued rally and so forth. So for the moment, you know, I wouldn't want to bet against this bull market, in spite of all the flaws and all of the criticisms you can you know, apply to it. You know, there's people I've reading, and even I've had these thoughts too, where, you know, gee, you know, how is this going to keep moving up? You know, and what's holding it up? And it's got to drop. And this, you know, and we're in a bear market, and where the yield curve's inverted. And you know, I thought a year ago we might be into a deeper recession, and I think in some ways we might be, but the headline numbers, such as they are not reflecting that, and the market is wanting to look the other way in some cases. I mean, you have CPI data, you have the PPI data, which was certainly hawkish. People praised the CPI the other week as being somewhat dovish, and I'm not sure I agree,
Right.
but nonetheless, that's where we are.
Yeah. 94% counting on a rate cut in September is kind of a scary number, because I don't know that 94% of people are generally correct on anything.
Well, there's three. I think there's now as much as three rate cuts till the end of the year,
Even
which, the Fed's not even near their target. I don't even know if the 2% target is a thing anymore. I think their target's probably unspoken at 3%. And even then, that target is got a lot left to, well, they're not calculating CPI like they used to. Let's put it that way. So it's
Right.
kind of a moving target. They're going to come up and engineer a number and a result, and kind of produce a result that they want, just by recalculating. I think CPI has been calculated something like 20 different ways in the last 2 decades. But anyway.
Well, the big story this last week and this week coming into this week is obviously the switch into the Russell. So let's put IWM up there, because I got a breakout at 203 and the thing's been flying ever since. And you can see, there you go, 203 breakout, and it's really flying. Now, of course, look at the RSI. You're going to get a nosebleed up there pretty soon. But clearly, it was a good time to buy in that 200 to 203 area, and then obviously reap the reward today. Norm, this is small caps. The reason they're going nuts is because obviously they're way undervalued, versus the large cap and the tech. And of course, they do very well during, a lower environment. And then I did read that their PE ratio differential between the S&P 500 and the S&P 600, which is the small caps, is at the widest level since 2000. Which means the value of these things is screaming out. And after it reached that extension in 2000, the Russell went on for 5 years and outperformed the S&P. So that's why people are starting to take their shot here, is because the last time that differential was at that level was a time where the years after, really the small caps did a lot better. So
I mean, you're really alluding to it right now. The reason for this kind of a jump. I mean, when you see. Yeah. The Nvidias and the big names kind of hovering and not giving you, and you have a major concern that you may be the person getting in at the highs for now. Then you're going to look at the lesser stocks, the smaller stocks, and this is of course where people hang out and look at the Russell.
I mean, they're using the money from tech. Because that's why maybe some of those tech stocks have backed off 20 or 30 bucks or so, and they're obviously maybe rotating here. Plus, if you have new money coming in, rather than buying the all-time high of tech, maybe some people are starting to take new money, hold on to their tech, but maybe they're putting new money into this kind of a thing. But do you think it might? Well, obviously the question is, do you think it might continue, or do you think this is a?
Well, I danger Will Robinson when I look at something like this, and the reason is because in general gaps will be filled, and we've got a couple of major ones here. I'm actually not so worried about the first one, because it was really going after it hadn't broken the high, but that second one between that shooting star that failed, and that probably trapped a lot of people on the short side. You may get 1 or 2 more days on the upside here, but I believe we're going. I think to me, from my experience, I would be watching for a reason to look for the market to return to that 210 level.
I'm with you on that, Norm, because that is the logical place. That's the logical place to come back to after people get their short run jollies.
And I would caution people, because part of a big chunk of what we do is the mental and emotional part of trading, and it's much better to perceive that something is going to happen without taking action. Perceive that something's going to happen, and then when it does, you're much more likely to jump on that situation, as opposed to just being nebulous about it and say, now you can give yourself an if then. If the market goes here, I'll do this. If the market goes there, it goes down, I'll do this. But the idea is that if you are uncertain what you're going to do, and you say to yourself, well, let the chart tell us. Yeah, you want the chart to tell you, but you want to have some kind of anticipation based on your technical knowledge of what you believe will happen. And then when it happens in that way, with the technical strength, then you have the strength to move on it without chasing it. Because this is the kind of chart that I see a lot. I would think a lot of people would be chasing when it decides to do something. So it's a dangerous chart.
Can you give a longer term chart, David, to get a perspective? Because the high on this index used to be about 240, 245. There you go. So it might be trying to make a run, or as you can see by measuring the lows, this would be a logical place where it could stall if you want to use those former lows as resistance. Huh?
Yeah, there's a lot of buying and selling in that past accumulation in that in the 21, 22 period. And when that happens, you get a lot of interest, people defending that price area. Whereas it between 2021 and 22, you had the market in a pretty tight range. But I'd like to hear Erik's take on it.
Yeah, no, I'm going to switch it over. Erik, what's your take on this, Russell?
Yeah, no, those are all good, very good thoughts. And I would not chase it here. I wouldn't buy it here. But, I think there's definitely a rotation. I was reading that some hedge funds got caught wrong-footed with their, Russell exposure versus their large cap, giga cap, tech company exposure. And, a lot of this has been short covering as well. So it might run out of steam. There might not be a lot of fuel in this Russell in the very near term here, So, it's something to consider. But, I think I read the same content that you did, Jim, about some of those valuations from back when, and looking at the subsequent results and so forth, and how things transpired over time. And it's kind of like the question of, okay, a month ago you're looking at the Russell versus the S&P, for example, or the NASDAQ, and you're thinking, okay, which is it? Is the Russell undervalued, or is the NASDAQ overvalued? Which is gonna come and move in which direction? That's I guess we're kind of getting an answer here to some degree, which is the Russell is starting to play catch up in a big way. I mean, those are some pretty big outlier moves here in the last week on the Russell. I'd have to say, I don't know what it is statistically, but the standard deviation of the significance of these, or at least the magnitude of these moves, has got to be like, I don't know, 4 or 5 standard deviation statistically speaking, this last 4 sessions in particular.
Right.
So yeah, and like you said, that RSI is just getting kind of laughable too. So you might want to take some money off the table if you've been fortunate enough to have been there, and that would be certainly, you couldn't be blamed for doing that.
Mm-hmm. And the 10-year note, tried to get under 420. If it fails to stay under 420, and the 94% of the people who think rate cuts are coming are wrong, then obviously you could obviously change the tune here, because one of the reasons they went up so fast on the Russell was the celebration over the CPI print being 0.1% an estimate.
Right.
At any rate, it's a crazy world out there how they react to things. But I think we're all in agreement that it does look great on a breakout. But if you really wanted to take a shot at it, you might want to see if you can pull back and then hold its lows, and then then get into the next leg up, if that'll work.
Let me ask you something, Jim, because and Erik may want to answer this too. I trade mostly commodities, as you know, and of course I've got retirement things in equity. But when I see a mismatch as far as I'm thinking gold and silver. There's when gold, for instance, gets way ahead of silver as far as its price relation, I'll buy one and sell the other against it,
right.
and look for that compression to happen, look for that normality to happen. Is there any way that, I mean, is there a conservative way out there for an investor? Maybe even more of I think it's, I look at that as more of a safe way to go. But is there a way to, say, buy the Russell and sell the
Well, I
Nasdaq?
mean,
Something?
yeah, you're the futures guy, so there's micro contracts on the Russell and micro contracts on the S&P and the Nasdaq. So obviously,
Right.
long one selling the other on the micros would be a lower leveraged way of trying to play that differential.
Right.
Yeah. But I did want to get moving on a few things because I want to run out of time. And the one thing that seems to be moving quite a bit, and I'd love to hear what Erik's got to start out with on this. Erik, the energy markets seem to be moving a little bit, particularly the stocks Schlumberger and Halliburton, which are announcing earnings on Friday. And the options, I found them to be very, very cheap a week or so ago, including their expiration in the week following. And the options are exploding. Strangles of 34 and 32 was $1. You can't go out to dinner in Laguna for $1. For $100. So it's a pretty cheap entry, and we're getting big action on it. Also, Schlumberger SLB, and both of these have dirt cheap strangles. And of course, buying options, obviously, you're betting on volatility, and if it doesn't happen, you lose. But if it does happen, this is an example on how you could win. Do you have any feeling?
So the Halliburton, you said those were at the money strangles?
They were right around the money because Halliburton went to about 33 and change, and on the other guy it was 47 and 46 or 45. So they were both a little bit out of the money.
I see.
When I do them, I generally do a little bit out of the money call, a little bit out of the money put, and because I'm betting on volatility, so I don't want to buy something that has all premium to it, that kind of thing.
Right. Well, no, I mean we kind of track the futures, more than we do individual stocks.
So let's put up
but,
CLD. Let's put up CLQ so we can discuss the price of oil.
Sure. I know the ETF, we've been, sort of, it's not that we don't pay attention to anything other than futures, but for example, some of the ETFs I think are a good proxy sometimes for looking at the broader markets. So XLE, that kind of had that's sort of on a bullish breakout here, and trending that way for a bit now. So we've been sort of tuned into that, but so we're looking here now at there's XLE. Yeah, so certainly what you're saying is they've been they kind of were putting participants to sleep, and premiums became ripe or juicy enough to consider buying these strangles. So those must be I guess today, let's see, we're up. Wow, I hadn't even looked at. Yeah, no, that's a great idea. Certainly you want to pick your spots wisely when you're buying premium, because that over time, that's kind of a lower probability outcome. You have theta decay working against you. But we certainly trade options, whether that's selling them or buying them. It just depends on, of course, the timing and the setup. So yeah, no, that's a great idea. You have sort of a way you can step into the market with using leverage. You have low cost, like you said, $100 doesn't buy a whole, but you can buy a lot of leverage.
A lot of leverage,
and a lot of leverage.
Yeah. One other thing is you got earnings. This index that you watch, half of it I think is Exxon and Chevron, and both of them are going to announce earnings by basically the first of the month, which will be here before we know it. So there seems to be some front running of those earnings reports, don't you think?
Yeah, absolutely, it is. The participants out there that are typically moving the markets, the institutions and the money flows and the rebalancing and the so on and so forth. Those are the ones that are oftentimes in a very sneaky way, using option plays ahead of time to front run moves. So yeah, absolutely. And if you can get into something with the volatility low and the cost of that entry relatively low, then that's the kind of thing that can pay off nicely. And one other point I'd make too is whether it's this in particular we're talking about, this particular setup, or whatever strategy you're using with options. But we like to also do the type of approach where you're not entering a position and exiting the position, all at once. So there's nothing that says you can't enter with a certain amount of your capital and then enter at another level and another level, and then same thing on the exit. It's difficult to get your timing perfectly correct on your entry and your exit with your whole position. So just kind of scale in and out of positions, I guess, would be my thought on that.
Something, Eric, I know would be right up your alley from the sell side of options is you get a market like this and you really think that there's a defined trend, you could sell the puts all day long if it's going to be able to sustain. And it's like a cash register as long as the trend stays up, because you can see in 2024, selling puts all the way up to 98 was certainly a cash register.
Oh yeah, well, that's certainly, people have been making a fortune doing that with the stock market of late. So exactly. Absolutely.
Yeah. And sometimes you sell the puts and you take the premium and you buy a call with it if you want to get more aggressive. And the only thing you give up is the difference between the strike price and the premium you took in, which in some cases is peanuts.
Absolutely.
Yeah. And of course, all all about that. So people who are listening, definitely call Erik after this and he'll explain the sell side of these options as well. Norm, do you have a feeling on this energy? Because you're a commodity guy. And where we going? Can we put the crude back up so we're talking more about the commodity?
You may want to leave this. Okay. Well, put the past. Yeah, because I just saw something here. I mean, when I look at the energy market in general, I think of one thing: global warming and heat. I think there is a tendency to have an increase in demand just because what we're seeing. Anyway, if you could draw a couple of trend lines for me, start at the first January of 24, that bottom there, right there, start there, and then the first, not the second one, but the first. Yeah, no, you were right the first time. That's good enough right there. And then draw me a second one from the peak. Yeah, you know where I'm going. From the peak down to that. Yeah, now not quite there. Come down a little bit with your X. Right there. Okay. This is still not, the jury's still out here because of the recent high right before the one we just broke. But when I see this, these breakouts can tend to, you saw kind of a similar path in the beginning of this chart where the market came down and ran up. This could be, I would anticipate, I would look for a run up here, after we wash out a few of the people that are just jumping on today's move. If it winds up to be, I can already see a little bit of coming back down to the old high. But the idea here is that, when you see moving, this is the 100 and the 50, all within this triangle. It's pretty orderly, for what it is. And, I think that I would be looking for a bit of a pullback here, and then a continuation of a move higher. Just from a fundamental standpoint, but I would look at a more short-term chart, more technically. Let's go to the crude chart, and there may be a little bit of confirmation of my thinking there. This is there's another two trend lines here. The one on the top is kind of obvious. Yeah, that one, and then the first, right there. I mean, that's pretty good. Yeah, and there's the other one. So, the market is trying to figure all of this out. And look at all the accumulation there. Yeah.
Oh, yeah.
Yeah, you could have, but I think you're getting the idea here that this is a mass accumulation to go one way or the other. And I think that with the advent of what's going on with the world, I mean, we've got wars going on. We've got. I mean, there is a threat of peace in the Israel-Hamas war.
The threat of peace.
Yeah, but generally, I think the whole weather thing. I mean, I'm on my way to Istanbul at the end of the month, and when I was preparing for it, I asked SIRI and ALEXA what the temperature, the average temperature is in the end of July, and they told me it was 81 degrees is the high. Well, it's been 90, 95 there for the entire month of July so far. And this is common in what's going on in the world. I just think that anybody who is looking for a path that will continue to grow, it's the path of this earth heating up and the consequences. And you're looking at a chart right here that's going to be one of the big consequences, you know.
Yeah, I mean, I was thinking if it can break above 85, 90, going to 100 or 110 is not off the table. And if that happens, these oil stocks are going to go nuts on the upside. That's in my view worth a risk and reward potential. But it definitely has to get above those numbers I mentioned, or else if it starts going 75 or less, it'll be right back in the soup again. So
this is a pretty solid. These are pretty solid lines you're drawing here. And I think when you get to the bottom of this line, if we were lucky enough to see that, in the what is it, about 78 or something, then I think you could tease, and you've got a short term, a 60-minute chart where you got a nice signal to go long. I think going long at the bottom, on that bottom line, could be a nice play with a short risk. But again, this is my idea of anticipation. I'm anticipating the market coming down to the bottom end of this range, and then with the breakout toward the top end, that's the go. So anticipating markets like this is really important.
It's a classic case of something that's trading at 81 is a much better buy at 85 or 90 than it is at 81, because at 85 or 90, you'll have a crowd behind you. Here, you got a bunch of people wondering what's going to happen next.
Yeah, and you got a crazy Erik breakout there in April of the RSI. I'm gonna.
All right, I'd like, if I could, put the gold up there because that's a big breakout thing, and then it's pulled back, and now it's going okay. But Erik, I'm sure you have some kind of view on the gold, right?
Yeah, absolutely. Bullish. Yeah, so let me just look at that graph there. Yeah, well, clearly above the moving averages, so you're going to attract buyers as long as you can maintain that. And looking here, what's interesting, in May, you see the RSI actually drop in relation to the price. So that would have been made a new high on price, but the RSI didn't follow. So there was your signal to perhaps back off of any bullish positions. And then we've been consolidating and moving higher since, but you got this triple top up here, just itching to make a new high. And I think Bitcoin surged pretty good over the weekend, as far as I recall, and probably I haven't looked yet.
It's up a couple of thousand today, so.
Is it that?
Okay. Hit the lows,
Yeah, so nonetheless, I don't know. Is it fair to lump Bitcoin in with gold? I think maybe it is to some degree. It's sort of trading like a commodity, or even like a financial asset. I'm not even sure how to classify Bitcoin, but or how I even got to talking about Bitcoin after you just asked me about gold. But nonetheless, yeah, I think.
Can we do something real quick? Can we put up GBTC? Because I saw 48 as the bottom, and if Tom Lee is half right, and this Mount Gox supply is getting behind us, this thing could really get going, because he's calling for Bitcoin to double by the end of the year. And he's not always right on his timing, but he's not a moron either. And so I just thought this 48 number where that gold line comes in is about as low as it's going to go, if it's going to go. So I thought it was a fantastic buy last week at 48, and so far so good. Getting above that 55 number obviously would be helpful. But yeah, do you see the Bitcoin as a big potential, Erik?
Well, I guess it depends on timing. We can get into a much deeper conversation on the BRICS and central bank digital currency, and the Fed now running a sort of a beta. Well, actually, it's not even beta. I think the Fed now, digital money transfer setup is already in action. It's being used. So what's the future going to look like? Is it all digitized, trackable, traceable, programmable money? and cash is now outlawed. You know, I don't know. I mean, I don't know what to make of that, but I mean, it seems to be moving in that direction. I mean, I know that I sometimes go to some place and I'll have some money with me, go to an Angels game, go to a baseball game, and you try to give them $20 for your whatever you're buying, and they don't take it.
Yeah.
It's kind of a weird thing.
Like
And
20 bucks for a half a beer.
yeah, yeah. So anyway, I got kind of on a tangent there, but you know, lately some of the research we've been looking at has been, I guess you could say, had sort of a hands-off, neutral to bearish approach on Bitcoin. You know, of course, today they might change their mind, but you know, if you're going to be bullish gold, you're probably going to, in sympathy, need to be bullish Bitcoin. I think they seem to be paired for the moment. I don't think you're going to have Bitcoin all of a sudden put, you know, gold to bed and gold investors to bed and make gold irrelevant. I don't think that'll happen either. So nonetheless, this chart is a bit of a choppy mess on Bitcoin. I see the volume there. You know, you got decreasing volume, decreasing prices in the last month or so. But you know, after today, that chart could look a lot different.
Yeah, that's a problem. The volume, you know, even trying to trade it, if you try to trade it in the futures market, I mean, it's a choppy market. Can we put up the silver real fast? Because that's the market
sure.
that I'm speaking to Eric, talking about the family of asset class, this particular asset class. But there is just a formation that I love to see, and maybe I'm crazy about it. But if you draw a bottoms line and a top line on this, start with that last bottom. Yeah, right. Yeah, that's good enough. Yeah, that's one right there, and do one on the top. You know, yes. You know, it's a very now it looks like what do they call chart fitting, but if you had drawn these lines before half this run was there, it's almost perfect. It's pretty good the way you've drawn it right here, but you see what's happening. This is what I call a megaphone, kind of a formation. And what happens is that we hit the top and we hit the bottom. If this thing goes higher, and that's my anticipation here, you know, we could come down and test that small, actually, well, let's just talk about the way it's drawn right here, because that bottom line could have been drawn, take that bottom line, and you've got, I'm pointing on my screen like you can see it. Anyway, that's good enough. I think you see the megaphone effect. If we go higher to reach that top line where it is, you're looking at somewhere in the $36, $37, $38 level, which is not impossible when you look at the gold silver ratio, which is way off base at about 80 to 1, should be more like 60 or 65 to 1. So we've got a situation here where I think if we anticipate a higher price in this metals Bitcoin kind of category, this could be the one that you would want to take advantage of. I mean, there are micro contracts, even though the prop trading firms somehow don't like the micro contract in this, but there are certainly, you could play this in gold and whatever, but I think they're, as usual, when they both run gold and silver is the one that has the most magnitude. So I like this. I always like this megaphone, you know, where you're seeing it very consistent along the way. I'd be watching this.
Yeah, Norm, we're going to switch over to our own screens and explain some things we really like, and of course how people can get a hold of you. So this is a good segue, because obviously silver is one of your favorite deals. Share your screen, explain exactly what you're seeing in the silver, and then go into how people can get a hold of you and get more information.
Okay, not necessarily in that order. All right.
In some type of order. In a random walk.
I'm going to share the screen, and you can see how crazy simple my charts look. But let's look at the silver here. There's that megaphone. You see how well it was. You drew it, David. I was just trying to ask you to kind of put the bottom here where I originally drew it. You get a lot. You can get fake outs, but when you get fake outs like this that result in small bodies, the vast majority of the time you'll re-enter the cage here, the megaphone. But this is the 34 EMA which I use as a backstop when I'm looking. This is the 8-bar exponential moving average, which I consider the golden mean. That's been a little bit. It's been on both sides here, but there is some consistency. I would be looking, if we break out here, you know, I think we're off to new highs in this. Of course, with as Erik suggested, you know, you may shoot for the moon, but you're best off taking some profit along the way. And if I were going long here, I would be taking part of my profit at a test of this high, a few points below, and then I would see if my anticipation is correct, and preserve what's going up in the way you preserve. I can't go through my methods of preserving open trade equity, but this is a chart that, and you can see right here that that we've got a lot of potential to move higher on the RSI if we break higher. Right now, everything still looks pretty sideways, but I like the fact that we're still within this megaphone, which is forgiving as you go higher. But I do like this market for all of those reasons. So keep your eye on it.
Yeah, looks good. Did you have any other one you wanted to quickly hit?
Yeah, let's take a quick look at. What was I looking
How
at?
that Japanese yen you used to follow? I keep hearing 1986. It sounds like a long time ago. They said the yen hit a 1986 price. Is there any value?
You know that the yen, actually, I've been preferring the euro dollar because
Okay.
it's a bigger value. But I mean, this, I could push this all the way back. This market has not stopped going down, and you can see this 34 EMA that I've shown you. This is a back, so that when you see breakouts above this, you've got to see more. You know, this is not good enough. I find this Fibonacci number, maybe that's the reason, but we're at that critical point right now. Yes, we could be turning around, but I think a lot of people saw it here at this double bottom. Oh my God, look at this double bottom. Etc. But you know, for only, you know, until further notice, I mean, we're already at a very high, relatively high RSI. But you know, I wouldn't. There's nothing to do here except for look for continuation of the downside. So I would be against those people that say we're finally turning around. I mean, that's certainly not what the chart is telling us.
So, Norm, as far as helping people with the discipline and the psychological part, and also trying to hone their skills for prop trading qualification, can you give a little bit more idea on how people can get a hold of you and how you're going to help them?
Yeah, if you go to theirmoneyyourprofit.com, you'll see the loaded gun simple trading plan, which is part of some of the charting that you're seeing right here. Where in fact, here's a loaded gun. This right here is a loaded gun signal right here. Just these two pieces right here, this extension and I call it a hesitation where the trigger is, and then the barrel of the gun crossing the 8. Look at where this thing leads. You know, here's another relative example, and another one. Here's another example of a loaded gun to go short. So it's a trigger mechanism with a short risk and a potential to go much further. That's what the loaded gun simple trading plan is about. Now, if you look at theirmoneyyourprofit.com, you'll see the pricing there. If you are looking for a good deal on that, I just offered one on Saturday. Just put in the discount code July13, and you can see the kind of discount that I've been talking about. It was a very successful presentation. I haven't offered that price in a very long time, but I wanted to just let you know that I just believe that the prop trading is really the future of especially small traders, even though it's the larger traders that are jumping in right now. Why, you know, when you could put a couple of $100,000 in calm paper for 5, 6, 7%, why risk your own money when you can risk their money? I mean, so it's the big money that's moving to it, but I think it's the small money that needs to appreciate it a little bit more and start to think like a professional trader. So that's my gig.
Okay, and Eric, I'm going to switch it over to you. If you had share your screen, if you had some specific market that you're kind of keen on, and then of course explain how people can get a hold of you and how you can help them.
I think I scared Eric.
No, I'm here. I had
Okay.
myself on mute. I didn't want you guys to hear me drinking water. Okay, so okay, here we go. Okay, you should be seeing the screen. Oh, now my mouse decided to quit on me. Can everyone see the screen okay?
I can't see it yet.
It's still,
Can
it's still loading.
Oh, it's still loading. Yeah.
Oh, can you see it, Jim?
No, I see it. It's share. It's just started the screen sharing. Double click.
That's all I'm seeing right now.
Yeah.
It says your screen share is loading.
Oh.
I'm not
Yeah.
sure.
It looks whatever you got up there is going sideways.
Yeah.
Yeah, I don't know why.
Try canceling it and sharing it again.
Okay.
Sometimes it glitches like that.
Yeah, I don't know. It just locked. Okay, hold on.
There you go. You're on now.
I see something here now.
Yeah, this is kind of just for kicks here.
Yeah.
These analogs, right, where people try to overlay some chart from history and suggest that the same thing will happen. I don't know, maybe not, but this kind of made me, chuckle a little bit. I mean, who knows? But it is kind of astounding. Nvidia is near 12% of GDP, compared to, like, for example, Cisco, which was the big stock back in the .com year 2000 when everything broke. So with that in mind, why don't we see if we can continue with a bullish position here? So I thought this was what I could do is look at Theta Trader. This is our options trading software that we developed for basically trading the indexes. So we trade the E-mini, S&P 500, NASDAQ 100, and Russell 2000 mini. And there are bullish and bearish and non-directional strategies that are all pre-built basically by algorithm that we created. And just for kicks, here's some put spreads on the the S&P 500. So maybe you want to sell some out of the money put spreads, sort of like Jim had mentioned. When you've got a market that keeps running higher and higher, you can just sort of I don't want to say print money by selling out of the money put spreads, but in hindsight, it certainly looks easy when you see a bull market. But here's an example. Here's a September week 2 expiration. Here's the put spread. The algorithm is sort of selected for us. Nothing too crazy. Nothing that's going to make us retire overnight. But nonetheless, this is what it looks like on the graph. You can see here's the put spread that you're selling. Here's the current market price. So these are 52.10 puts with a 51.90 long put to cover the position. These are always covered. And here's all the details of the position. I won't go into it too much, but it always defaults to a quantity of 1 down here. If you want to do more than that, you just increase the quantity. You can see each spread is about $1,000 for margin because that covers your maximum risk. So if the market went to 0, you wouldn't have a margin call. And you're selling the spread, so you're trying to collect 1.25 point. And you'll notice the premium profit potential here, targeted return on cash, targeted annualized return, your cash required. And look at the deltas here. The put you're selling has a delta of 9.91%. So that means there's over a 90% probability that this option you're selling would expire out of the money. So that's the whole idea. Then you just place the order, and this is just a demo account. So that's kind of how we do it with options trades. And if you wanted to know more or have a demo account for yourself, just go to our website, altivest.com. And that's our website. You can see the one-touch trade alerts and our demo accounts. You can sign up right here and just click that button, and it takes you right to the page. So yeah, short and sweet, and that's it.
Perfect. Thank you very much, you guys, for being here. As far as Option Professor is concerned, what I'm doing, we do have a options alert where I go in and look for options that I think look pretty good. I do a lot of strangles, so you got to be very careful because you're going to pay premium on both sides. But in the case of sometimes like your Halliburton's and Schlumberger, it could be a very good thing. And Apple, after their convention, was a very good thing. But you have to be very careful, obviously. And I also do selling puts on things like IBM or things that I think that are obviously going up. So if you go to optionprofessor.com, I can explain how you can get the options alert and also an options masterclass, which is a 6-hour thing where you get a lot of information on options as well. So optionprofessor.com, put your information in and I'll get the stuff over to you. Hey, Norm and Eric, it's always great to hear you. And obviously, everybody should take advantage of talking to you guys on the things that you can do for them. And until next time, good luck and good trading, everybody. And I'm
Thank you, Option Professor. Much appreciated. I heard a lot about Erik, and you did not disappoint. Really good being on with you, Erik.
No, thanks for having me, guys. It's always a pleasure to hang out and have a place to park myself for an hour. So thanks again for having me.
Yeah, and you guys have great stuff, so people will really benefit by getting more information for sure. I'll send it back over to David.
All right, yeah, and if you want to learn more about Erik's Theta Trader, he will be back with us tomorrow, actually, for a special event. So it's 1 p.m. Eastern Time tomorrow. We're going to have a special event with Erik and learn more about Theta Trader, and how his algorithms generate options trades for people. Did you want to add anything about that, Erik?
No, I think that, well, yes, in the sense that we're going to do a presentation. I've got something planned where we're going to look at some of the broader themes, sort of like we did today, but then we'll use option strategies and apply those strategies in certain conditions, and we'll show you how to automate things so you don't have to screen watch. That's a real big benefit that people tell us, in terms of what they like a lot about Theta Trader. No screen watching, you're not tied to the screen, and we have trade alerts that are integrated with your trading account. So again, you don't need to really put a lot of time into logging into third-party platforms and trying to transpose and copy alerts. So everything's integrated technologically with your trading account, and everything can be automated with your risk and your profit management. So we'll talk about that, and we'll do some live demos as well.
All right, sounds good. And that'll be Tuesday, July 16th on TimingResearch.com. You can just come to Timing Research and there will be a link to join the room. And all right, so just want to thank you guys again. Great discussion. Covered a lot of good info today. So just a quick reminder to everyone, be sure to subscribe to Timing Research on YouTube or your favorite podcast app, or now on Substack, and you can get all the recordings and presentations that way if you're not able to join us live, and as well as any of the past shows and presentations. So I just want to thank my guests again for today: Erik Gebhard of altavest.com, Norman Hallett of thedisciplinetrader.com and theirmoneyyourprofit.com, and the Option Professor of optionprofessor.com. Thanks, everyone.
Thanks, David.
Thank you.